Good day Forex trader. Your USD Forex signal, volatility expected ahead of ECB and US inflation. While this rebound could be a dead cat bounce, there is a likelihood that the pair will keep rising as bulls target the 61.8% retracement level at 1.1230. Bullish view. Buy the Euro USD pair and set a take profit at 1.1230. Add a stop loss at 1.0950. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.100 and a take profit at 1.0900. Add a stop loss at 1.1100. The Euro USD pair rebounded sharply on Wednesday and on Thursday morning as a risk-on sentiment spread in the market. It rose to a high of 1.1100, which was the highest level since last week. It has risen by more than 2.6% from its lowest level this week. Risk-on sentiment. The rebound of the Euro USD coincided with the strong performance of American and European stocks and cryptocurrencies. It also happened in a period when the CBOE volatility index retreated by over 10% from its highest level this week. The pair will react to several events on Thursday. First, European leaders will conduct a meeting in which they will deliberate the issue on Ukraine. They will also talk about a new round of stimulus to prevent the bloc's economy from going to a recession. Recession risks have been at elevated levels in the past few days because of the performance of the energy market. European gas has jumped to an all-time high while oil stands at the highest point in more than a decade. At the same time, many companies are expressing worries about supply chains. For example, automobile firms will struggle to find parts because of the sanctions on Russia. Still, it is unclear the size or structure of the stimulus package that the leaders will offer. The Euro USD will also react to the outcome of the European Central Bank meeting. The bank is expected to leave its policy framework intact for now. It will also signal that it will continue with its quantitative easing policy in a bid to prevent recession risks. Before the attack on Ukraine, most analysts were expecting the bank to start hiking in the second or third quarter. The US will also publish the latest inflation data. Analysts expect the data to show that inflation crossed the 8% mark in February. The situation will continue to worsen because of the rising energy and other commodity prices. Euro USD forecast. The Euro USD pair has been in a strong bullish trend in the past few days. Along the way, the pair has managed to move above the 23.6% Fibonacci retracement level. At the same time, it has crossed the 25-day and 50-day moving averages, signaling that bulls are gaining control. The RSI and MACD have also risen. Therefore, while this rebound could be a dead cat bounce, there is a likelihood that the pair will keep rising as bulls target the 61.8% retracement level at 1.1230. Gbp Usd Forex signal, brief relief rally expected. There is a likelihood that the pair will continue rising as bulls target the next key resistance level at 1.3250. Bullish view. Buy the Gbp Usd and add a take profit at 1.3250. Add a stop loss at 1.3100. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.3150 and a take profit at 1.3100. Add a stop loss at 1.3200. The Gbp Usd pair rose cautiously as the recent strong sell-off took a breather. The pair is trading at 1.3170, which is higher than this week's low of 1.3082. US inflation data ahead. The Gbp Usd pair has been in a strong sell-off in the past few days as concerns about Ukraine remain. There are concerns that the UK economy will be hit after the recent sanctions on some of the wealthiest Russians. Most of the oligarchs have invested heavily in several sectors in the UK like real estate, finance, and retail. There will be no major economic data from the UK on Thursday. Therefore, investors will focus on the upcoming American inflation data. Economists polled by Reuters expect the data to show that consumer prices in the US held steady in February. Precisely, they expect that the headline consumer price index rose from 7.5% in January to 7.9% in February. If they are accurate, this will be the biggest increase in inflation since the 1980s. Excluding the volatile food and energy prices, analysts expect the data to show that core inflation dropped slightly from 6% to 5.9%. Still, the biggest worry among traders, Americans, and policymakers is not February's inflation data. The focus is on what will come after Russia invaded Ukraine. In the past 2 weeks, the price of natural gas has risen close to a record while the crude oil price has moved to the highest point in over 14 years. Gasoline price is averaging at over $4 per gallon. Other commodity prices have surged as well. For example, wheat has risen to an all-time high while metals like palladium and platinum that are important in the automobile industry have also risen. Therefore, the Fed and the Bank of England are in a difficult place because they need to raise rates without affecting the economic recovery. Gbp Usd Forecast. The 4-hour chart shows that the Gbp Usd pair has cautiously bounced back in the past few hours. The pair is trading at 13,166, which is slightly above this week's low of 13,082. On the 4-hour chart, the pair remains below the 25-day and 50-day moving averages. It is also at the important resistance level, which was the lowest level on December 20 last year. Therefore, there is a likelihood that the pair will continue rising as bulls target the next key resistance level at 1.3250. Aud USD Forex signal, more bullish on recovering risk sentiment. The pair is likely to trade higher over the day. Today's AUD USD signals. Risk 0.75%. Trades may only be entered prior to 5 p.m. Tokyo time Friday. Short trade idea. Go short following a bearish price action reversal on the H1 time frame immediately upon the next touch of 0.7390. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. Long trade idea. Go long following a bullish price action reversal on the H1 time frame immediately upon the next touch of 0.7288. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Aud USD Analysis. In my previous analysis on February 23, I wrote that if the price retraced to 0.7207 and bounced there, it would make a good long trade to 0.7250, but if the price hit 0.7250 first and stalled there, a short trade could be taken successfully. This was an indifferent call as the price blew through both levels over the day. This currency pair has not been at the forefront of the Forex market, which since the Russian invasion of Ukraine has been focused on European currencies and safe havens. However, the Australian dollar continues to act as a risk barometer and the price here has followed risk sentiment, which seems to be improving as it becomes clearer that Ukraine may be able to hold off Russia, which could result in some kind of peace deal. This seems to be becoming a more probable outcome and peace talks are underway, although it is far from clear they will succeed. This news is boosting the Australian dollar at the expense of the US dollar. Technically, we see new support at 0.7288 which has acted to push up the price, and there are no key resistance levels ahead until 0.7390, which means the price has considerable room to rise. However, bulls should be careful near the half number at 0.7350, which may be inflective and act as minor resistance. I am prepared to take a long trade from a bullish bounce at 0.7288 today.